Right, so here we are on video number 6 on payroll, which, no, should say number 6. It says number 5. Whoops. Payroll number 6, payslip and forms. Right, so payslips. Most of us probably received a payslip. A lot of companies now are moving to an electronic system where you have to log in to see your payslip. But either way, whether it's the physical or an electronic copy, it must be provided to each worker on or before payday. And the payslip will show your gross, your net, the amount of your deductions that may change. So that's your tax, your national insurance, maybe student loan deductions, pension possibly. And then the number of hours you've worked if your pay varies on this basis. So we've seen this payslip in an earlier video. Not very exciting. She hasn't got very much going on, but we can see her gross, her salary of £2,000. We can see her PAYE tax deduction, her national insurance deduction, and her pension deduction that gives rise to her net pay. We then have a number of forms that we need to be aware of, and these are the 3 that you need to be mindful of. So we've got the P60, which is the end of year summary. So every employee should get a P60 at the end of each tax year, showing what they've been paid, what deductions there have been, etc. There's a form P11D, which gives information on any benefits in kind. So benefits in kind are not government benefits. We're talking here about benefits provided by the employer instead of money. So I've given the examples of company car, private health insurance, could be gym membership, could be use of accommodation. There's lots of things that could be provided that the recipient would have to pay tax on. And then we have the P45, which is the butt of many jokes. And, someone does something wrong at work, it's like, oh, you're getting your P45 soon, because it's used when people leave an employment. So let's look at each one in turn. So we've got the P60 first of all. So every employee must be given the P60 at the end of every tax year, but no later than the following 31st of May. So remember, the tax year ends on the 5th of April. So by the 31st of May, they need to have this document, which shows all of these things here: taxable earnings, tax deducted, tax code, NI number, and the employer's name and address. Remember, taxable earnings different from gross pay. You might have a deduction for those allowable expenses such as pension contributions or charitable giving. So why do we need a P60? Well, we might have to claim any overpaid tax. We might want to use it to apply for tax credits or other benefits, in fact, and it can provide a proof of income, which might be handy if you're applying for a mortgage or something like that. This is an example of a P60. So it's Sally James again, her national insurance number. She's got a payroll number at work, and we can see the pay for previous employment, so nothing in there. She's got this for the current employment year. It doesn't tally up with the payslip, by the way, because that was only up to 24,000. This is a different tax year. She must have got a pay rise. So her total for the year, that's her gross pay, tax deducted, and she's got her final tax code of 1257L, which of course means that she had £12,570 tax free. Notice it doesn't show the net pay, but that's not really relevant. You can just take the tax deducted away from the pay and work that out. So this is what you will have with regards to the P60 in the exam. It will simply tell you that it has to be provided by the 31st of May. That might help you remember that that's the one that relates to the end of the year because it's shortly after the end of the tax year. We then come to the P11D. So this is the one that's used to tell HMRC about any benefits in kind that the employee has received. This one has to be submitted by the 6th of July following the end of the tax year. You get a bit longer. The employee must be given a copy by that date as well. And the employer has to pay Class 1A national insurance on these benefits by either the 19th or the 22nd of July. So even if the employer gives the worker, I don't know, £1,000 worth of health insurance, then the employer still has to pay 13% on top for the privilege of providing the worker with that. So you probably won't be able to see this terribly clearly. It's sort of an old version, but it hasn't really changed. So, I mean, if you've got good eyesight, you might be able to work it out. So we've got employer name, employer PAYE reference, employee name, their national insurance number, their date of birth, any assets transferred, so that you've given them cars, property, goods or other assets, any payments made on behalf of the employee. So that might be like their membership for subscriptions for OAT or something. Vouchers and credit cards, living accommodation. Probably more used is mileage allowance payments that are not taxed at source. And here at the bottom, any information about company cars. There is another page to it, but hopefully you get the idea. It is just a record of expenses and benefits that have been paid to the worker during the tax year. And as I said, the worker, the employee, would have to pay tax on these, and also the employer has to pay tax. So you can see there we've got filing deadline 6th of July. It doesn't say P11D. So you have to know that the expenses and benefit form is the P11D. And the PAYE and the Class 1A payment date, the 19th or 22nd of July. Which tallies up, same for monthly payroll. We then come to the P45, so the one that is given when somebody leaves. So the idea of this is that Part 1 is sent to HMRC by the old employer. So it tells HMRC that the person has left. Part 1A is for the employee to keep for their own records. And then Part 2 should be given to the new employer, who then completes Part 3 and sends it to HMRC. Now, the idea of the P45 is that when you give this to your new employer, it means that they can tax you correctly. Now, a lot of people just don't realise the importance and don't give it to their new employer. And then what happens is they get put onto what's called a month 1 or a week 1 tax code, which means they typically will end up overpaying their tax, and then they've got to try and get it back later. So if you are given a P45, it makes sense to give it to your employer so that you can be taxed correctly straight away. So again, this is what one will look like, and we really can't read it on here, but it will include reference number of the employee, their national insurance number, their name, their leaving date, if there's any student loan repayments, their tax code, their final pay, their total pay to date, their total tax to date, their gender, their date of birth, the employee's address, and the employer's name and address, not, by the way, national insurance, right? So this is very much about tax, income tax. because it is worked out cumulatively, sort of a running total, whereas national insurance is not. So it's more relevant that the information is given about the tax paid to date.